All right, welcome back. My apologies for being late today. Yeah, sometimes life just comes in between, and you have to set your priorities. But nonetheless, there's always the replay available on both YouTube and BitLive. BitLive, I don't think no, BitLink. I'm sorry. My apologies. Don't think I have the link available or printed somewhere yet because yeah, I just didn't get to it right now. But YouTube, if you want to watch the replay, have a look at YouTube. Also, a little bit of follow up on a remark that I had yesterday. Some person said on YouTube that my stream is pretty boring, that I look silly talking to myself because, yeah, I just started streaming, guys. You don't build Rome in a day. All I can do is be consistent, and afterwards the consistency will after the consistency we'll see where it all leads. Right now I'm just sitting home. I've got a lot of free time on my hands, and my intention is basically just to give back a little bit to the community from which I got a lot out of. And what did I receive? Like last pandemic, last lockdown, I followed a YouTuber, not a YouTuber, just a guy who started streaming and spreading some real technical analysis knowledge and stuff, which helped me out a lot and helped me sort out a lot of misconceptions that I had from my prior experiences. I didn't start day trading like 6 months ago. No, I started like quite some time before, but my successes were less consistent than they are now. And all that was with the help of the dang Oracle. I enjoyed having a live stream that was not overpopulated, so it was very easy to ask questions, and he was very happy to share some knowledge and also help set apart the misconceptions that most people are having. So yeah, this is what I'm trying to do. This is what I'm hoping to do. So yeah, if you like this content, just follow me, join the chat, ask your questions, ask away. And if not, you can always watch how I go over my analysis, what my train of thought is, for you to be able to replicate or to let some things rub off on you, so you will be also more consistent and more successful in making your own analysis and setting up your own strategies according to those analysis, because that's what it is. That's what it's all about. Every time you look at the chart, you need to be very disciplined and go over your analysis, go over the whole all the things that you are keeping your eyes on, and reevaluate, constantly reevaluate, set up a few contingency strategies, like, okay, if this happens, I'm going to do this, if this happens, I'm going to do this, so that you're more reactive than proactive. This is very important. Don't just jump on the train when you see it leave the station. When you see it leave the station, basically it means you were too late. Okay, you need to be more proactive, more reactive, and just waiting for the possible, probable scenario to start come within a reach of being a valid play. And this is where you can actually set your positions a little bit ahead of time, not too much. Try not to be too eager, and don't jump the gun, but also don't just wait and see, and then, oh, it's going up, oh no, it's gone down, I'm gonna show it. Don't do that. Okay, so this is something that I just wanted to put out there. On another note of getting some feedback, I received some comment on the last video where somebody told me that I should not be shilling a derivatives platform where you can trade with high leverage. So before going into that, I want to warn everybody, like, high leverage trading is more risky. Why am I more of a supporter of Bybit and high leverage, not high leverage, but leverage trading? Because I am a day trader. Okay, if you want to be day trading Bitcoin with the moves that Bitcoin is making on a spot market, you're gonna have to put down a lot of money before you can actually start reaping some profits out of it. And your profits percentage wise are not gonna be so phenomenal. Okay, so this is why for day trading and for Bitcoin day trading, I do prefer a solid and robust leverage platform rather than just going spot, buying some Bitcoin, dumping some Bitcoin. If you really want to go on the spot and do those actions, then it's better to look for altcoins. But yeah, altcoins, in my opinion, they're really nice. Okay, don't get me wrong, but it's more an investment in a project rather than an opportunity to really day trade. Why? Because number one, Bitcoin follows or is correlated with the dollar. The other altcoins are usually correlated to what Bitcoin is doing, Bitcoin and the Bitcoin dominance. So if the dominance is shooting up, then on a Bitcoin pair, you will see that your altcoins are going to be doing really bad, or they are very strong projects that either move along with Bitcoin or outperform it a little bit more. But apart from that, in my opinion, for day trading, I still think and believe Bitcoin is the better option because there's a larger volume, and like I said, it's the leader of the pack. Now you also have Ethereum that's becoming a little bit its own thing. Usually both rise and fall together. Sometimes you can see an inverse correlation, especially now with the DeFi hype that we just had. Now looking back at DeFi, I've been skeptical from the beginning because DeFi is an awesome project. It's an awesome idea. It's what we need. It's really revolutionary. But being on Ethereum, I think that's the Achilles heel that could do it. Ethereum, the more Ethereum gets used, the more expensive fees become. And, having a platform as DeFi where, you expect a large volume to be handled, this is just asking for trouble. So yeah, this is why in my former videos I also made a video about how excited I am to see DeFi move on EOS, just because EOS is, in my opinion, the better choice for such a project. But yeah, all that set aside, I just wanted to put everything out there so that we are clear on topics and things. This is not for spoon boys. This is not for people who just want to make a quick buck and just listen to some hypes and go in it balls out. No, this is here content that I try to put out for people who are really interested in learning how to do their own technical analysis. Yeah, all right, cool. I just hope we were on the clear now. Now let's just dive in. Let's have a look and see what the platforms are doing. Yeah, like usual, we're just alone, so I will be talking to myself again, but that's not an issue. It's not a problem. Tomorrow, remember, you can join me on the live stream at 12:30 UTC. That's the 0 GMT time zone. So calculate for yourself which different time zone you are in, and tomorrow I will be there fair and square. All right. So now let's look at what happened today. So where did we leave off yesterday? Yesterday we were talking about possibly this rising wedge shape that was becoming more apparent. And what happened? I told you that rising wedges are usually more likely to break to the downside. Okay, Also having this series of bearish divergences here, you can see it more closely, more clearly on the higher time frames. You see like this one, bam, this one, this one. Those are on a downtrend, lower highs, while we are seeing higher highs forming on the price action. So what did I say? In my opinion, this was the third strike, and this is usually where we should start being a little more cautious and start thinking about a possible correction or pullback or breakdown. Now, I did draw some support lines. We measured them out with the reverse RSI indicator. It's Pig's his reverse RSI and EMA indicator. I love to use this because it applies very much to my trading style. And where did we see? We already see a nice little bounce on the 15,600 mark. Let's go down to the 1 hour chart. All right, here we go. So it didn't really actually touch it to the T, but in my opinion, it's close enough. We had a reaction. Now, the next level is possibly going to become a resistance area where, again, we might turn down and see a little more of a swipe to the downside. Possibly. Now, what did I say on the downside? The levels really not to break are especially here, the point of control. The fat red line is very important because this is the largest area of the volume node. If we break down below, we could find support on either one of the red lines. If not, if we break this, then I think we are up for a a change of momentum, and we're gonna see more lower highs forming before we are actually going to see a new uptrend. On the lowest part, on the really lowest part, I think the 9,500 could in that case serve as a bottom or real point of no return. If we manage to break down below this, then you know, winter is coming, and it's short season, although we are entering winter period, which is it's actually funny, but not so funny if you're a hodler, right? But let's not go there. Let's go level by level. Just like I said, we are not speculating, we are day trading. And day trading, just, it doesn't matter. Price goes up, price goes down. You can make money either way as long as you're ready for it, as long as you know what to be looking for. So now, right here, what are we looking for? Black coffee to get our minds pumping. Yeah. So what are we looking for right now? Right now, on the shorter time frame, on the 1 hour time frame, we do have already a nice bullish divergence. So what am I talking about? I'm talking about this level, these levels. Yeah. All right. They correspond with these levels here, here, and here. So what do we see? We see, in respect to this one, we see lower low, lower low, lower low. And what do we see here? Yes, higher low. So all this, bullish divergence, right? But this is a 1 hour chart. The 1 hour chart can give us a little bit of a bounce signal where we could see like, okay, this is going to react here, but on the longer term, and I'm not speaking weeks and months and stuff, but at least for the rest of the day or maybe the couple 2 days to come, this is not very strong. What we want to see is such a signal on at least a 4, 6, or yeah, at least a 3 and a 4 hour chart, at least, at minimum. So let's have a look at the 3 hour chart and let's see if we have that same buildup already. And what do we see here? Here it's splitting hairs with ouch, scratch all that, blam. Let me make this very open and wide. Now we do see already a little smudge with this area. It's not bad, but it's not really the strongest signal. The one that I really would hope to see get broken is this one here. And for now, these two are still just a continuation. Okay, so continuation, not bad, really not bad. It means that we are just moving along the trend. We're going to be arranging a little bit, maybe even printing a few more higher highs, but it's not going to be such an explosive move. On the other hand, what we don't want to see is create another bearish divergence with this area here, and this is going to be the first thing that I want to calculate to see how far we need to go in order for this to not become a bearish divergence. Oh yeah, and before we do this, another thing, because I'm just going all over the place, first thing that we notice is that this shape doesn't hold anymore. So how can we solve this? What am I going to do? I'm just going to delete this line here, right? I'm going to take this one and we are going to put it over these highs here. Okay, because here we did have our strong correction, and from here we can say that we start a new shape, a new pattern. So now we're going to copy paste this so we have the exact same angle, and what do you know, this kinda sorta fits the bill, except for this little wick here below. Right here we are well within a rising channel. Of course, rising channels also still notorious to break to the downside, so this is not a rule, this is not a trend to really set your hopes up. Also still seeing this pattern of lower highs on the RSI over higher highs on the price. I do expect a little bit more of a correction to the downside. I don't want to be negative. I don't want to shoot the all the bulls down. You can still take a few longs and ride them for a little bit, you know, just be very careful. Now let's have a look and let's see how high we need to go in order to break this one here and not have a bearish divergence. Yeah, okay, so the area to break, of course, would be this high, and then let's have a look at the RSI 76.9. Let's enter this in the magic calculator, 76.9, and what comes out? 17,160. So basically, we still have this one marked off here. Let's do this, 17,160. Now, why is this different than what we had before? Just because we already have a little bit of a continuation, a buildup of the rest of the formation, and then of course, you know, price moves by buying and selling power, building up against each other, and the RSI calculator just tells us how much power and reaction we could get out of having such a read on the RSI. So this could still fluctuate a little bit. It's always a little give and take. Okay, so don't try to set positions to the T on this. Just use it a little bit more as a gauge of knowing where more or less you want to be looking. Okay, like I said in the beginning of the stream, we're trying to be reactive and not proactive. So these are the lines in the sand, and just you know, set yourself up to defend or to guard those lines, or just to drop them and bail. Okay, so this is how I would suggest doing this. Now wait, let me open this a little bit more. Now, okay, breaking above this blue box, we need to see price rise really above this area for RSI to be making a higher high. Okay, I hope this is clear. If not, if we don't get it, we just have a continuation of the bearish divergences, and the reaction is just going to become stronger. Okay, now we do on the 1 hour chart already have a little interesting situation building up. Now between this point and this point, we do see that we have a lower high. Okay, watch out, because this candle is still forming. You know, it's nothing set in stone as it is right now. So always watch out for, you know, jumping the gun and thinking too early that you spotted a divergence. Divergences need to be confirmed in order to actually see them play out and play through. But what do we see between here and here? Potentially this could already be bad. Now between here, I would like to make a little measurement and see what RSI level and what price level corresponds to these two areas, and maybe also with this one. Okay, so let's do these three areas. Let's calculate them, and let's see if this could help us make a little more of a map. Hey, CX Red Alert. Honestly, I'm not very interested in becoming super famous. Honestly, I don't care. If people want to join me, you're always very welcome to join me. Pankagram, Pan, I'm going to say Pan. Welcome and thank you for following me on DLive. Very happy. I hope you're happy with the content that I'm putting out there. Okay, if you have any questions, just type your questions, ask away. If there's things unclear, things that you're struggling with, don't worry. I would be very happy to shed some light on these. All right, thank you very much, and thank you for the follow. All right, now let's keep on going. Right now, well, yeah, this area and this area. Well, these three areas. Not this one. This one I really don't care about because this is playing right now. But this one is at 46.9. You know what? Let's scratch this one because we're so close anyway. If we start trending down, then, you know, be ready for the next low to get hit. Probably down here at 15.4, 15.5. Something like this. But if we move up, what do we want to see in order not to have a bearish divergence on this one and this one? So this is what we're going to calculate. This is 57.50 and this is 71.75. So 57.50, 57.5. Okay. So this is actually very tight and narrow. So at 16,215, we would be at the RSI level of this little top here, and at 16,215. So this would be right around here on on the top of this one. Okay, so how are we gonna mark this off? That would be right here. So just at this resistance line. I'm gonna just draw a ray. $215. Okay, and this one 71.76. 71.76. Yeah, this one ranges a lot higher. That would be 16,649. Okay. So how are we going to mark this off? You know what? Let's just draw some boxes, and let's see if we can get away with this. So 49, there we go. And here, from here to there, let's make another box. All right, so trouble areas. These boxes, very, very much to be avoided. Very much, very important not to see a candle close here and a rejection to the downside, because this would definitely signal continuation to the downside. Okay, so let's also remove this line. Okay, this is a short term. Now let's go over to the longer term time frames, and let's see if we get some similar reads, and then maybe we can start building a plan from there. So on the low end, I do think those areas are still gonna be the same. So 47.50, 44.50. Let's just look at it. So yeah, we're here already, so this actually doesn't matter. 44.50, 44.50. 15,900. Yeah, we already. No, we still didn't close. It's a tight one. It's a very tight squeeze. Let's go for this one. This is 39. I think this is the one to keep our eyes on. 39 is, yeah. All right. So we can raise this up a little bit more. There we go. And then, of course, this being located here, I do think we can pull this up like this. All right. Now this one I'm gonna delete. Okay, and we're we're cleaning up the place. This is good. This is really good. Also going to delete this. All right. All right. This, I'm going to make it fatter. Okay. So what do we read here? So what does all this mean? Imagine price would indeed be rejected, start going down. Under the blue line, we are getting in bullish territory. Beautiful. Now, we could see price bounce up here somewhere, move up. We could go below the point of control, this big node here. And this is where things get tricky, because down here, having a closure of a candle staying above the red line here, still okay. We could still save it, and maybe even with a few bounces start seeing upward momentum. Now what we don't want to see, and this is the final resort, is a wick, just a wick of a candle that breaks down below this area. This is where I think it's game over, and we are really going to start seeing a strong reaction to the downside. I'm going to remove this box as well, because this doesn't matter anymore for now, because all this is more longer term stuff and brain farting. We don't do that. Okay, so yeah, I think this is quite a solid plan for now. If we actually break down here, there are going to be bounces around this this situation here. We might even spot a little bit of a bottom, but wicking down below this area is never ever going to give us a strong reaction to the upside. Getting below here, we are going to see some more downs and stuff, and then maybe some ranging if we're lucky, maybe not, and building lower highs like this. Okay, so yeah, I want to keep all this stuff a little bit apart, a little bit separate, to not clutter it all up. All right. We're starting to have a plan. Let's look at the 4-hour chart. Let's just compare the reads that we had with the 4-hour chart to see if all these things correspond a little bit, because the 4-hour chart has a wee bit different kind of closing. I always like to compare it. I say it a lot, and then afterwards maybe we can also look at the daily and weekly close, just to see, because it's weekend, what kind of a closing we would like to see tomorrow night, and what kind of reactions this could bring on the longer term and going into next week. Okay, I see something different here as well. This green trend line, let me just rearrange it, because yeah, this could look a little bit more neat, right? Okay. Let's look at the 4-hour chart. This is a 4-hour chart. It is a 4-hour chart. All right. Let's have a look. So, like I said, on the upside, we want to look at this and this. See if we can turn the momentum around and just start printing higher highs straight off the bat. Like I said, on a 1-hour and a 3-hour chart, it's already important that we don't close the candles within this blue box. Okay, if we close a candle here, we get rejected and we start breaking down to the lower areas. Just forget it. This plan is not gonna work. Okay, what we want to see, if we see it go up, is at least finding some support every time, or at least, you know, breaking really all the way through, closing above or closing here in between, finding some support, going back up. All these could be signalizing that this plan to the upside is still holding. But yeah, if we go up from here and we close within one of these boxes and then we start seeing a move to the downside, then I think in our minds we can already start thinking more about seeing a little bit more of a lower low. Of course, the area not to break, the levels not to break, those correspond to the wicks, so I would stick to them. But from where on do we get bullish divergences? And this is what we were looking at. So first, let's recalculate these and see if they still hold. So 72.4 and 64.5. 64.5. This would be at 16,500. 16,500. Well, you know what? The 4-hour chart is actually a little bit less generous, you know. So maybe we could even just extend this area completely like this, have it overlap, you know. We want to go through the blue boxes, we want to break through, you know. Closing within this area, especially on a 4-hour chart, is okay. Now let's look at this one here, 72.4, 72.4. 17,000. All right, so yeah. All right, the 4-hour chart, let's do it like this. 17,000. Cool. Okay. Now from here on, if we manage to get here, we might find some support. We might find some resistance. We might even go back down here and continue on. But what is important, if we make this pattern, is that we don't make a lower low. Very important for this pattern to be valid. Okay, so this is set on the higher time frames. I'm happy with that for now. Now let's go down to the bullish patterns that we could spot, and the only one that I still see that is a good one to be looking off of is this one. Now here it's 42.88, let's call it 42.9, 42.9, and we got 15,700. Okay, so yeah, basically similar thing. Let's just set it here on the node, and please forgive me, I'm gonna have to close the windows because this is not noisy. Okay, please forgive me. All right, I'm back. My apologies for this. Please don't judge me for this, but yeah, children, they just have to play, you know. So all right, in order to get a strong bullish signal, we really need to give this area here a shot, with the bottom being the red line here. I would prefer seeing even a touch here on the node, on this node, finding support here, and this would give me the impression that that we might just see a strong reaction If we break below this node, I think it's gonna be a little bit more difficult. So how do we mark this off? Let's see, I'm going to drag this just here. Right. Voila. Yeah. I think those are the levels we want to be looking at. I think this is it. I think we have a plan here, guys. Yeah. If you try to look, or if you're still holding on to a position, a long position, here I would strongly suggest, especially if we break below this, I would suggest losing your position, just taking the loss, and then waiting for the reaction, waiting for where it actually bounces, because it's not, once we see price break down under this node here, it's not very likely to just move up again. You know, it's if we do something like this here, I think at least there's going to be a little bit of a difficulty to get through. So yeah, you see price break down, you see the test, and probably this is where I would then be looking for an entry signal. And usually what will happen is that you will see something like this, very steep low, then it's gonna get higher, and on the lower low, RSI is going to print a higher low, and this is going to be my signal that we finally found a bottom. This is usually how I try to spot bottoms as well, you know, not at the beach, on the chart. Okay, I'm spotting bottoms on the chart. I'm not spotting bottoms outside. Okay, just to be very clear on that. All right, so let's look. Let's have a look at the daily. Because this is a weekend, and the daily and the weekly close are going to be more or less important, and also going to show us a little more information. And what do we see here on the daily and the weekly? We do see this this bearish pattern, this pattern of a top being reached. So yeah, there is a larger chance that the downward scenario would be coming into play. Okay, so be very careful. Like I said, be very careful. There still are a few levels to be broken, but I would be less optimistic in this situation here. What we might be seeing is actually something like what happened, where was it, here, same shape, you know, think this is very obvious, same shape. We have our running up, and then afterwards what happens, we keep printing the lower, well, those are actually not really lower highs, but they are topped out, you know, it's topped out, while the price keeps going higher. So it looks exhausted, and then afterwards what happens? Capitulation, you know, going down, printing a lower high, printing a lower high, printing another lower high, eventually just all the way down. Okay, so I think potentially this is a little bit the shape that we are gonna start forming. So if you're looking for a long position, it's very possible that you make a really nice play, but don't expect too quickly to see higher highs if you really catch a low entry point. You know, be happy to take your profits, because yeah, until I see a strong bearish, a strong bullish signal on the higher time frame, I would be very careful with this kind of play. And what is a bullish signal? where do we go? Where do we go? Like here. Right here. Yeah, on the daily, that was very, very hard to spot. But, I hope if I zoom back in. Ah, Jesus, why like this? Why like this? Where was it? Yeah, here. So what am I talking about? A bullish signal for such a formation could be like this. So we see here RSI being completely down in the dumps. Very, very strong candle to the downside. Then what do we see? No, this was not the one that I want to show. This is not the one. Neo, this is not the one. No. Or maybe it was on the 4-hour chart and I'm just remembering it incorrectly. Yeah, this is it. This is the one. Because this is such a longer time play. It's hard to find it on the 1-hour chart. Okay, so these larger plays, they need to have their strong reads, at least on a 4-hour chart. Also a 6-hour chart is going to have it. Yeah, exactly, the 6-hour chart is also having it. So what am I looking for then? If we really see it break down, the uptrend will only start picking up again once we have our local bullish divergences being formed again. So like here we have our low, lower low, lower low, and on the RSI we do have a series of higher lows, and they continue to build up as we are turning momentum and making our higher lows. Then here we do see a bearish divergence. What happens? Price goes down, but we never come down lower than this anymore. Yeah. All right. Now, yeah, I think I dragged this out long enough for now. Let's just have a look at how the dollar closed the week, because yeah, well, what do we know? What do we see? Dollar did not pull through. And like I said yesterday, this was a very tough situation to measure out. You know, it's shit happens. You know, sometimes you just have to accept that we are seeing a situation that is not as clear or easy to read. We did have a little more down, but what do we see? We do see that between this point and this point, we did close on a bullish divergence. So possibly, if we don't break this level, we could see the dollar recover. If we do break this level, then the next one to be looking out for is this one here. Now, because this RSI level is sitting so low, I don't even need to measure it. It's very obvious that that the dollar is going to have to, oh, I even measured it out, that the dollar is going, that price is going to have to break below this level and stay within this blue box area to have a bullish divergence and start going higher. If we break below, then possibly rejection, rejection, and lower highs. Of course, dollar right now is already so weak. Question is, how long are people gonna want to hold on to a dying currency? So a lot of things that are potential and that are very close, very important to keep a close eye on. Yeah. Now let's look at the E-mini futures. Let's see how they closed. E-mini futures, yeah, closed on a nice recovery. Potentially a little bit scary here. Yeah, let's hope that it can stay above the red line here. There's a big node of volume, so yeah, chances are really good that E-mini futures is also going to start pushing up a little bit more. Apart from that, I don't see any issues. Let's have a look at the 6-hour chart. Yeah, maybe a little bit here. Yeah, maybe a little more ranging down, but all in all, doesn't look too bad, which makes me think that there is a chance that Bitcoin is actually going to bounce well within the ranges that we marked off, and just make its recovery and keep on going. It's perfectly possible, but it's very hard to predict the future. Basically, it's impossible. And this is why we set our limits, we set our boxed areas, and we keep our eyes on the price. And as soon as we see a little bit of one of these limits being reached, we have already our strategy in mind. And as soon as we know, okay, this is very, very possible to play out, bam, this is where we strike. Okay, all right, cool. So I'm gonna leave you guys with this. Now at the end of the channel, if people are still watching, thank you for watching. If you want to give me a little more support and help me make this channel grow, like, share, and subscribe, especially subscribe, hit the like button. Thank you very much. And if you want to show a little more support and you're interested in leverage trading, and yes, leverage trading is more dangerous, but also possibly more profitable if you know what you're doing, then Bybit is my most favorite platform for leverage trading. They're very professional. They have a great support team that is so quick on the ball to react on tickets and stuff. Like, you will never ever get automated answers and having to wait and sit on your thumb. They are really, really quick to react. The community is amazing. There's a chat box where you will be able to have real conversations, not like troll boxes on other platforms that most people have probably heard of. And there's an affiliate link that you can use. It will give you a 90% bonus. It will also give you a few more perks if you sign up using my affiliate link that you can find on the website Wolves of Bybit. Very easy process. Just go to Wolves of Bybit, scroll down, there's a sign up sheet, go sign up to Bybit. Then afterwards, send me an email using this form. Fill out a nickname, desired nickname, use the email address that you used for Bybit sign up, and maybe in the messages you can also add the user ID so I can verify that you actually did sign up using my affiliate link. This is where I can give you a lot more perks and advantages and growing possibilities and stuff. It's really interesting. You guys don't need to invest anything if you don't like it. Just take your reward, make one trade at least so you can cash out your reward, and no harm done, no hard feelings. But yeah, just give it a try. I'm pretty sure you're gonna like all the possibilities and the positivities that come out of it. Once you're verified, I will also add you to my VIP Discord channel, where you can just send me messages day and night, doesn't matter, 7 days a week. If you have any questions concerning your strategies, analysis, or remarks, or anything, you know, just type it in there. You can join me on my phone then, and you know, let's make this community grow. Thank you very much for joining. Thank you very much for watching. I wish you the best of the best. Happy trading, and let's look at other platforms. Yeah, that's it. Thank you very much, guys. I will see you tomorrow, 12:30 UTC. Remember, be there, be square. It's going to be awesome. I'm pretty sure we're going to be having a lot of updates again, because this is the market, you know. It just happens all the time. Stuff happens. Okay, well, see you tomorrow. Have a nice day, guys. Bye bye.